Hi there, this is Larry Edelson for my Uncommon Wisdom video update for Thursday, August 20th. We're starting to see some great action here in the markets. Pretty much exactly what I've been expecting and forecasting for you. Before I get into them, though, I just want to mention one quick thing. I'm working on some new software for this video that I hope to have up and ready for next week, where I can show you some charts that I'm looking at of the markets when I'm speaking with you, bring them on screen for you to take a look at, and show you some of the things that I'm seeing, and give you some tips that I've learned over my 30 years studying these markets and looking at charts. There's some interesting things that I want to be able to bring to you, uncommonly technical analysis, if you will, and cyclical analysis that's not very common these days, and with this new software I'll be able to do that with you. So look for that next week, and it'll be exciting. I'm really looking forward to it. I'm going to be playing with it a lot this weekend and getting it ready for you. Back to the markets. Gold has taken a bit of a follow-through selling wave here on the downside. We're trading about 937. It looks like that short-term decline, which is way overdue, is starting to unfold. However, we really need to see gold fall below 925 to confirm that decline. Still a very, very bullish longer term. In the dollar has again been lifting its head short term, which is what I've been forecasting. I don't expect a big bullish move in the dollar. A lot of people do. I don't see that at all. In fact, more and more big money investors are starting to agree with my longer term outlook that the dollar will be replaced as the world's reserve currency. This morning, PIMCO out of California, the world's largest bond fund, put out a statement that they expect the dollar to weaken considerably over the long term and lose its status as the world's reserve currency. You know, I've been saying that really since early 2000, and it's a 12-year cycle in the dollar. So we have another 2 to 3 years of decline coming in the dollar, and that will be interspersed with brief rallies, which we're seeing now, which is also, of course, putting pressure on gold, and interestingly enough, putting pressure on the stock markets. You have to keep in mind that a stronger dollar is deflationary, a weaker dollar is inflationary. So when the dollar rallies, expect now to see stocks sell off. We're in that kind of environment where a stronger dollar is not good news for stocks. There are other environments, for example, the late 1990s, where a stronger dollar is good for stocks. But we're not in that kind of environment now. We're in a debt-ridden environment, and ground zero for this massive debt financial crisis is the United States. Ground zero is the dollar, and the debts and the tsunami of bond offerings and IOUs that are coming out of Washington and even broken states like California. So the public is, investors worldwide, and the public is really beginning to question the finances of the United States and question the cornerstone of its economy, which is its currency, the dollar. The dollar is, any currency for that matter, is nothing more than the stock of a country, if you will. And it's a barometer of confidence or the lack thereof of confidence in that particular country and that country's leaders and that country's economy, etc. So the dollar here is under attack. I heard from a subscriber today, for instance, on my blog, who mentioned that she and her husband travel to, I believe it was Montreal 3 or 4 times a year, and just recently their U.S. dollars have not been accepted when they've gone out to certain restaurants and purchased things at convenience stores, newsstands, what have you. Their dollars are being shunned by the vendors that they've done business with in the past on their trips to Canada. So that's some anecdotal evidence. I'm finding the same thing here, by the way, in Asia. My dollars are not only are they not buying as much as they purchased before, but the dollar is being refused on the street. You have to go to a bank or to the airport to change your dollars to a currency exchanger in the airport. Let's take a look now at crude oil. Crude oil backed off a little bit down to that $68 range support level. It's still trading between 68 and 71. I expect oil to break out to the upside after the correction is over. It's pretty much following gold at this point and the dollar. As far as the dollar strengthens, oil sells off just like gold. And as the dollar weakens, we start to see a rally in oil just like in gold. Other markets, grains are selling off, meats, other natural resources that I follow are selling off, copper is selling off. Big news, China. China is down sharply, another 4 or 5%. It's off about 20% from its high of a little over 2 weeks ago. Counting my blessings that I recommended anyone who was following my recommendations in China took their profits a little over 2 weeks ago, right before the top. Knock on wood. However, just be aware there's a lot of bearish sentiment out there about China and Asia now because China is selling off. This is just a short-term correction in China. It has a little bit more to go. It is not the resumption of a bear market in the Chinese stock market or the economy. It will bottom, and we will see another leg to the upside to higher highs in the Shanghai market, higher highs than the 3,600 area that we just saw a couple of weeks ago. So be patient there. We're standing aside the Chinese and Asian markets right now. I'm looking for the next pullback, and I will have some recommendations there. Till next week, have a good weekend. This is Larry Edelson.